I'm Iman Rapeti, and I'm the host of the 2023 Pipsy Media Box.
And I'm Leo Lippis, Chief Executive of Lippis Advisors.
Leo, it is lovely to talk to you today, and thank you for coming all this way into our media box, and thank you very much for taking part in the conference. One of the big areas that you're focusing on is around digitization and the future of money. So all of these digitization trends that we're seeing, which are changing the way that people are paying, how do you see it developing over the next few years?
Well, I think digitization of money and of payments has been one of the most important things I think that's happened in the last 10, 20 years right now. Like I said, it goes back even much further than that. If you think of the card systems that we have, if you think of a lot of the non-cash payment systems, right, this has been going on for 50, 60 years. So largely what we see is a continuation of that. What we're really, I think, is really interesting is seeing the way in which digitization is now finally reaching into pockets of cash, pockets of checks in other countries, in other countries at least, and other types of payments that have been reluctant to be digitized in the past. So over the next, call it 3 to 5 years, I would expect to see that continue, expect to see the digitization and digital inclusion beginning to reach segments of society here in South Africa that it hasn't reached previously, so that people who historically have not had the opportunity to participate in the modern economy do.
What are some of your observations about what the biggest obstacles are to it happening in an exponential way, particularly in a developing economy like ours?
I think there are a lot of them. I mean, so part of it is unrelated to payments. Some of it are things like the cost of data, and the way in which data access and access to a payment system, which is driven chiefly through mobile phones, right, becomes expensive because of the way in which data is priced. There are other issues like that, like smartphone penetration in general. So as that increases, okay, it also gives the opportunity. So it's one thing to have the inclusive payment systems. It's another thing to have access to those as well. So those are two sides of the same coin, and having one without the other can make things very different.
So you started off by talking about this migration by both consumers and by business from cash and checks. We're moving increasingly into electronic payments. This includes, of course, card payments, electronic fund transfers and money payments. E-wallets, for example, are a big way that people transact and move money in South Africa. People want the convenience and speed that is associated with being able to transact in the digital world. Are we edging towards moving towards money becoming obsolete?
Yes and no. This would be my very short answer. Yes, we're edging that way. Again, we're creating additional use cases, additional ways in which people can digitize transactions, like PayShap, right? Recently introduced here in South Africa, allows people the opportunity to make person-to-person payments, okay, using a proxy such as a telephone number or an email address, right? Being able to use a proxy to be able to make a person-to-person payment. So that's going to, again, reach into parts of the informal economy, reach into parts of personal services that weren't able to be reached before by digital transactions. At the same time, however, cash is a really, really useful thing for lots of people. It is the most financially inclusive payment instrument that we have. Everybody can use it. Everybody knows how to use it. A 5-year-old child knows how to use it. You don't need a bank account to use it. You don't need a mobile phone. It works offline. It works anywhere you want it to work, right? So it's an incredibly useful thing to have. And I think it's going to be with us for a long time.
Is it possible, given the uncertainty in the world, and kind of the wisdom of the old people of stuff the mattress full of money, at least we know that we have it, the risk of banks becoming illiquid, or there being a run on banks, or there being some major catastrophe that locks people's money away and they don't have access to it, could that drive or shift people's sentiments towards just having that hard fiat currency in their pockets?
Well, that cuts both ways, right? So on the one hand, you could imagine a world in which we have a central bank digital currency, right? So an e-wallet that would hold central bank money in the same way that our physical wallets today hold notes and coins, but a digital version of that. The problem with that is that actually it could accelerate bank runs. So if I'm able to convert from the money I have in my bank account into a central bank liability, okay, in real time, right, that could actually increase the speed of bank runs and increase the danger of that. So these things need to be carefully controlled, carefully monitored, and the proper limitations need to be put in place so they don't cause more problems than they solve. I can understand the appeal, however, okay, of wanting to have an entirely digital transaction. I want to have an entirely digital how shall I call it, financial life. I can understand the appeal of that. It makes a lot of sense. At the same time, however, it erodes certain qualities that cash provides us with. Issues like anonymity, issues like privacy, immediacy. How do I handle offline payments, right? When the load shedding is going on, or the mobile phone network is down, or and so on and so forth. So there are a lot of hurdles that need to be solved to create a cash-like experience with digital payments.
This is so interesting. So it sounds like what you're saying is both the global perspective around how markets operate, the uncertainties, some of the trust issues that people have, is that people will probably tend to hedge their bets and keep their money in a hybrid formation.
Sure, just like they have been for the last decades, right?
Yeah.
I mean, we all have some cash with us. However, we keep it in bank accounts. Others, for example, will receive their salaries and withdraw it all in cash because that's what they know and they trust. The answer is not. It's not at all. It's as in most things, I think in life and most things, certainly in payments, it's not a winner takes all proposition. It's rather it's a situation where it's going to be horses for courses. The different payment methods are useful for different types of use cases.
A major disruptive event, Leo, for all of us, whether you lived in Johannesburg or you lived in, Jerusalem or anywhere in the world, was the COVID-19 pandemic. And that showed us that people were able to work with what they had, even in the context of high uncertainty. And we saw a lot of people migrating into digital platforms. How much, in your estimation, did that accelerate the case for the digitization of money?
A lot. So when you look at the data, I'll be honest, I don't need to estimate it. I can look at the data and I can tell you what happened. When you look at, for example, I live in Germany, which is, by European standards, a very cash-heavy society. However, for the very first time, the majority of retail payments were made using non-cash methods during the pandemic. And the trend has not abated, right? It's carried on in that direction. So that even my mother-in-law, who loves using cash, right, now uses her card for everything, right? Not to mention my 16-year-old son, right, who I see, he's got, 1 rand transactions because he's buying himself, a bread roll at the local market, and he's using his card to do it, right? Contactless transactions of tap and go, or using Apple Wallet or things like that, using e-wallets, using e-money, have been up everywhere around the world. And it's gone up, I think, typically somewhere between 10 or 20% over where it was pre-pandemic, and it's staying there. Since the pandemic is now over, we haven't seen a regression to where we were before, but rather those trends have continued. So it's provided a very strong impulse that has persisted.
Yeah, and that's so interesting. And I'm wondering then, given that, digitization has moved, in a particular direction where we're making more and more services and payment for those services possible in a digital world, where do you see the next disruption coming from, even in the space that is constantly changing?
So one of the other things I think is really interesting has been open banking, has been one of the more interesting developments over the last few years, which is, I define open banking as the ability to have a third party, typically a technology company, but not always. It could be a bank, it could be something else, to have access to information in your bank account or to be able to initiate payments on your behalf. They can only do this with your permission, mind you. Okay? But what it allows is it allows other people, other companies to innovate and to offer new services that meet your needs as a consumer, or as a business owner, or as a large corporate, okay? And offer services that your bank either can't or isn't willing to offer. And so open banking, I think, is one of the key disruptors. We've seen it regulated into existence in certain parts of the world, but a lot of players within the financial services industry are also seeing it as a competitive necessity, and they're actually seeing a financial advantage over doing this. That banks, we all know this is not a secret, historically have had a challenging environment in which to innovate. They're heavily regulated. They're relatively slow to invent new services. For whatever reason, I'm not criticizing them for that. There are lots of reasons for it. However, when you look at the technology sector, if you allow that innovation to be outsourced to them, but yet they can still have access to the customer base and provide them with those innovative services, it can be a win-win-win for everybody involved.
It's really, really interesting. And again, it's changing the way consumers interact with how they will purchase. And there are a lot of step changes in the process. What are your biggest aspirations for this gathering? There are a lot of different subject matter experts on a range of different areas within the payments landscape. What are some of the things you're hoping to leave with, and what are one or two of the biggest topics you think have really kind of oxygenated the payment space?
So I always love coming to PIPSI. It's a great event. It brings together the brightest thinkers, I think, in the industry here in South Africa. It brings together. Can I start that answer over again? Okay. Yeah. I always love coming here to PIPSI. It brings together the biggest thinkers, I think, in the industry here in South Africa and from abroad. There's a lot of, I think, cross-fertilization of ideas. There's a lot of learning that goes on here. And I think when I look at what are some of the hot topics that are happening within the industry, and some of the things that are happening here over the next few days, the cash to digital journey, I think, is a really important one. I think cross-border payments and remittances is another very important topic that's being addressed here, and I expect to learn a lot about it. And last but not least, CBDCs and digital currency and what impact that's going to have. That's been a really important topic for the last several years, and I expect that it will be for the next few as well.
Well, you've teed up my next two conversations perfectly. Leo, it's been a pleasure talking to you. Thank you so much.
My pleasure. Thank you very much.